Congress was warned failure to come to a deal over spending cuts and tax rises could hit the US economy. It looks as if that's exactly what's happened. The row over the fiscal cliff hit business confidence. No one was expecting a contraction in the economy over the fourth quarter of last year. Analysts on Wall Street were expecting growth of around 1%. While the contraction is small, the symbolism is huge.
Clearly, if people see a negative number, the first thing you worry about is, does this mean the economy is going into recession? That will be the first reaction. But then when people look at the details, they'll see that under the surface, this actually wasn't such a bad report.
Growth was dragged down by a cut in government spending, particularly in defence. Many businesses cut back on their spending too, worried that consumer confidence could be hit. There's some underlying good news. Consumer spending is up, so is business investment. House prices are also picking up. But the worry is the fiscal cliff still hasn't been sorted, only put off for a few weeks, and there's no sign of a deal between Republicans and Democrats.
Now that we have that little warning bell of, we need to look seriously at what's going on with the government, and both from their impact on the economy directly and indirectly, then maybe we'll see some real budget reform take place, and we might have better economy in the future.
Arguments in Congress over the fiscal cliff and debt limits has led in turn to the US losing its AAA credit status and now forced the economy into contraction. Both sides will get the chance to argue about spending cuts and tax rises in the coming weeks. Analysts had suggested these discussions would have little impact on the economy. They were wrong, and so now the pressure is on the politicians to do a deal and do it quickly. Alan Fisher, Al Jazeera, Washington.